Welcome everybody to Take Stock Live. Sam Evans with you on this Thursday afternoon. It has just gone 12 noon East Coast time. We are live on Facebook right now, and this show is brought to you by stockability.com. I hope you're doing well and happy. I hope the week's been treating you good. It is today's date, the 17th of December. Not too far away from Christmas right now. God, can you believe how quickly that's actually come round and how things are actually going right now? Absolutely crazy. So good to have you here on the show as well. Today, we've got a focus on options. That's going to be our focus today. And we're going to be talking a little bit about demystifying options, what they are, how people make them, I would say, complicated, and how to make sure that we don't make them too complicated as well. If you have questions about specifically anything that we're talking about today, go ahead on Facebook Live, click on there, watch us in real time, ask us questions, best way that you can stay in touch. I'm actually going to be monitoring all of our questions right now as we go through in here, so you guys can know. Actually, while we're speaking right now, I'm going through and I'm actually looking at the show and I'm getting everything up, and you can see who's in here and everybody's just watching the show, so this is great. Feel free to, just like I say, type in some questions. I'm checking them as they go. I'm going to be joined by my colleague, Daniel Bustamanti. He's going to be coming. He is our option specialist as well. So he's going to be blowing through plenty of stuff. And we're going to have a good chat about, we're going to look at markets, a few other topics that we want to talk about as well. You know, while we like to have our topic, and this week it is options, we want to talk about other things too. I can talk about just how cold it is here. I've just been out shoveling snow and sledding today. One of the benefits of being in the markets is you can pick your own hours. Hence, I'm still kind of in my snow wear. So apologies for not looking maybe as polished, but you know what? This world we live in, everybody working from home, we can be a little bit more flexible on everything that we do. Before we get into the next stage of everything, let's go take a look at the major headlines and where the market's at right now. I'm going to be bringing up the charts too. So let's just take a quick zoom over to that, my friends, and see where we are with that. Broad market's up right now. Let's take a look and see where we're at right now at the kind of where we're at the moment. S&P is up 14 handles. Futures on the S&P up 14 handles. These are our real-time quotes that we've got right now. 46 points up on the NASDAQ right now. Another big day, that NASDAQ, 95 points. Now steadily Dow Jones holding 30,000. It seems Russell up 9.5 on there as well. So again, what we're getting here is a nice group of, a nice kind of continued strength in the market. Is it Santa Claus rally territory? Possibly as well. S&P 500 did actually open above its record close level today. So good news for any investors right now. We look at that monthly chart, you know, literally as we hear right now. And again, another good month. Again, not quite as strong as last month, I'll say, but still decent on here. We'll be analyzing those charts in a little bit more detail when Dan comes on. What else is going on today in the broad market? Crude oil kind of not really doing too much right now, just floating around 42 cents up for the day. Gold had another big push, $31 up today. Let's go take a look. I mean, you can't write gold off. Since testing those lower 18,000 areas on here, gold has literally rallied all the way back up. On the show, we've been particularly bullish around the $1,800 mark on there, and we've seen about a $90 surge this month since the market went from that particular point as well. Do I think this uptrend is dead on here? Absolutely not. Can't write it off. Wouldn't be surprised to see this thing hitting 2,000 again. I'd love to get Dan's opinion on that when we get into the show, but definitely back to the bullish mode on gold. I mean, a little bit of work it's got to do to get through currently where we are on these charts right now. I would say a little bit of kind of price resistance coming in around the 1950s mark on here. And that's perfectly fine. But again, 2000 is definitely the marker on there. Let's just quickly look at that crude oil chart and see where we are at right now, going over to this live. Again, crude oil continues its push. We cannot expect that this market is not going to be able to get into this realm of, I would say, about $50. Let's actually zoom into this differently here, right around this particular area there. Oh, that's not the best drawing in the world. Around this particular price point, we've got, I'm going to say conservatively, about $55 on there. Still looks like it's on the cards. We've been just looking buying pullbacks on there. The strength of this trend is still strong. And I think that we're probably even going to say, if we can keep getting some real buying momentum behind this, $60 is a pretty, I would say, conservative target on this right now. Again, while we've established this new area, $35, $40 on here, this for me is the new benchmark. And again, not real price resistance coming in for a few dollars yet. So again, see a little bit more upside on the commodity market potentially with crude oil and also gold as well, and the stock market too. So plenty of things on this as well. Yeah, I know gold today. Bob Pellegrin joining us right now. Ranger Doug nailed gold today. We're going to go and actually look at Ranger Doug, who's been on the show before. and shown he is the gold specialist that we know in our world, the gold specialist who seems to just like be able to knock it out on the park, long term, short term as well. We'll go take a look at see what he's up to. Some great results in there as well that we can show on the charts. But again, still a little bit more bullish on this as well. Good shout out to you, Kens. Hi, Bob. Plenty of people kind of joining us as we go right now. So S&P kind of, like I say, high levels going on there. What else is in the news? Jobless claims come in higher than expected. Government on Thursday reported higher than expected, 885,000 initial jobless claims. Can we be surprised? Are we seeing the lagging effect of the COVID pandemic? Who knows? We'll find out a lot going into it. Elusive new stimulus package appears closer. Literally, politicians, Richie, loggerheads right now working on the next level of the stimulus deal for the COVID-19 bailouts on here. The FDA panel set to vote on Moderna's vaccine, looking like we're going to get extra supply of vaccines coming into our global economy, into the global world as well, which is a great news for everybody on here as we go into this tough period still. And Emmanuel Macron, the French president, has also tested positive for COVID. It seems like all these politicians are telling you, hey, don't go anywhere, but clearly they are. And now the classic case of do as I say, not as I do. Hasn't the stock market always kind of worked a little bit like that? Do as I say, not as I do. The stock market's been like it. The political world's like it. This is why we love doing what we do so much, because guess what? We try to get away from a little bit of that as well. So live markets coming, lots going on in the world now. Again, nothing I would say on here to respect, just giving my outlook on this right now. Going back to your major indices, one of my favorites is the QQQs. We just smashed right through this weekly level that we were looking at a couple of weeks ago. And now we're holding above $300. My projections are just saying, hey, on this, don't write off a continuation on the QQQs. Some of the levels I'm looking at and eyeballing over the next coming weeks now that this level's taken out, and now we've established ourselves a brand new, I would say, support area around the $299, $300 mark. We got to be looking at 315. We got to be looking at 330. And man, if this thing really gets some pace, 350 could be on the cards. People keep asking me, how long is this going to keep going on for? How long are we going to keep seeing this upside? I say I'm the wrong guy to ask. I just play the markets as I find them. Don't have an opinion. Just play it as you see it. You know, we're going to bring Dan on the show in just a second here. He'll tell you he's involved in the golfing world. You play the course as you find it. You play each hole as you find it. The same thing you've got to be with the market. At the moment, this market is still looking strong. There are some markets out there, I would say, that are looking weak, but the overall market's still looking strong. I don't want to fight that, especially going into Christmas. Let's see what happens in the new year. New president, I believe, January 20th. We're already seeing some bickering going on all there. Who knows? Let's just play that market as we find it, guys. It's definitely the easiest way to do it, I would say, on there. So that's kind of my outlook on it. Definitely going to be kind of looking at this in a little bit more detail. But hey, you don't want to just hear from me. You want to hear from my colleague, Daniel Bustamanti. My guest on the show is my working colleague and also my partner, my buddy on here. Dan Bustamanti is here joining us on the show right now as well. Dan, good to have you on the show. How are you, my friend?
Good. I'm not as cold as you, but it's cold. So.
You look at, there's you in Scottsdale, Arizona with your vest on. And then here's me with just kind of like this thing on, although it is a thermal, I guess, you know. I think I'm so warm, Dan, because I've been shoveling so much snow and been out with the little one doing the sledding and stuff. So it's all good. How you been, my friend? It's been a few weeks since I had you on the show. What you been up to?
Good. We've been getting ready, you and I, for next year for the company. We've had a lot of things to work on there. So we've been behind the scenes working. This week was a really good trading week. Finally, I felt good about the markets for the first time probably in 3 weeks personally. So that's kind of it. Hopefully I can start winding down here end of the week and just kind of relaxed for the new year to get everything going. So,
well, you know that as a running a company, though, a pair of us running companies, that's not quite as easy. We have those intentions and it doesn't always happen. But we know one of the things I know about this, and anyone who's been a regular viewer of the show up until this point, Dan, well, no, you've been very candid, you know, about the ups and the downs of your own trading. And, you know, and I know you've been finding it a little bit more challenging. And I love that. I've had people email me and go, you know what? It's really cool to see Dan on there. And he just talks openly about the way it is. Because a lot of these guys out there, these experts, these analysts, Dan, you know what it's like. You've been in this game for a long time now. It's like, oh, everything's always rosy. Everything's always good. And I just say bullshit, basically. I mean, come on, you know?
Yeah, I mean, look, it's no secret, man. I mean, so I've been in this, I'm 35 now since I was 20, right? And I've had like amazing years, amazing quarters, bad quarters, good quarters. Sometimes I get into slumps and I don't trade very well. Maybe it's because I'm doing too much or like I'm not focusing or just not seeing it. It's the same with golf. Like you talked about golf, I was playing the other day. And sometimes like I feel like I can swing in my mental games in it, then sometimes I'm not. So
Right.
this week was pretty good in the market. It felt like I got like my groove back. And if anybody's traded before, like, you know how that is. And I think it's right. Like, I think it's just bogus to talk about this concept that like trading's always smooth sailing. Like, it is not smooth sailing at all. It's hard, but when you catch things, I mean, it makes it rewarding. So yeah.
What have you, if you don't mind us asking, what's been what you had your biggest successes on this week? What markets you been looking at, buddy?
So we came in. I was doing a Sunday outlook with a buddy of mine, and we found. I think I posted some ideas in our chat room too. So Netflix was really profitable this week. So I looked at that. I tried Zoom, made a little money.
You know why Netflix was profitable? Because they did the Cobra Kai season 3 trailer. And if you're an 80s junkie like me who loves the Karate Kid, I love that show, Cobra Kai. They took that over from YouTube. I think that's the reason that thing popped, right? But
I actually watched that. So someone my buddy showed it to me. Yeah, I've seen that. I remember the old show. Who's the guy? What did they call the bad guys in the movie?
What's that one in Cobra?
What was the bad dojo? Like, you had like,
oh yeah, well they're the Cobra Kais, yeah.
Okay, that's the name. Yeah.
Cobra Kai never die. That's the one, man.
That's how little I know about it. So I did pretty well. Peloton was a really good trade.
Yes.
So Peloton, I sold a little early on that yesterday morning, but that was pretty profitable. What else? Netflix.
So Netflix, Peloton.
Yeah, it was pretty much Netflix. So Netflix we were kind of looking for last week. Kept stocking that. I think Monday morning we ran like 20 to 25 points. I just like
beautiful
nailed that thing. So it felt good to finally just catch something like pretty heavy. So,
you know, I'd love to. I know we're going to have a little focus on options, and it's great because I was talking about gold just before, and our other instructor, Ryan Watkins, you know, he was buying some serious calls on GLD ETF this week, and that thing popped hard for him. He's got a nice little kind of result on that. But before we talk about that, you mentioned Peloton as well. This week, I believe it was Monday. You know, I'm a big Apple guy. You know, I always have been and everything. But this week they announced the Apple Fitness Plus, you know, component to everything, which I think is awesome. I've yet this week to actually try it. I mean, I have it. Let me ask you this: how do you think that's going to, you know, affect Peloton? You know, because I know a lot of what they're doing there, you know, in his cycle. I've seen there's cycling, there's rowing. You know, two questions. Does this add to Apple's transition? Because for me, Apple's just becoming the complete company, you know, where, you know, it's a lifestyle company. I don't think they're not an IT company anymore. They're not a hardware. They are a lifestyle company, right?
You know,
I mean, look, I can even say I can't even
hedge fund in tech or in Nevada, right?
Yeah, and they're a lifestyle, and it's just again adding to it. I mean, you look around my room. I got the watch, I got the HomePod Mini. I just bought the new Mac Mini M1, you know, and I love the services. Do you think, you know, companies like Peloton, is there room, you know, as these big corporates come in and they take over stuff? Because for me, I got to be honest with you, Dan, I feel bad about it sometimes because I'm like, well, I do keep everything Apple because I like the organic nature of how it syncs, right? And it keeps my life simple. But then, you know, you take an established brand coming like Peloton, and are they quaking in their boots now? Are they like, oh my gosh, this is not good? What do you think, Dan? Just from a more fundamental perspective.
I mean, look, on a fundamental standpoint, I think Peloton right now is the quarantine Corona trade, right? So I think fundamentally, everybody's still in lockdown, so everybody's working out at home. They're buying those. So I think you got that fundamental move on there. I think Netflix, kind of same thing. I thought Zoom. I'm not giving up on it yet. I keep taking some shots at this thing. I think it's the quarantine trip. As far as I'm worrying, no. I think we talk about this in our short selling pro course that I created. I talk about this concept called 3F, so fads, frauds, and failures. I hate to say it, but I think Peloton, like any other lifestyle brand, is like a fad, right? So I think this company probably does well for the next 24 months, and you start to see it just kind of fade away. Now, whether it gets a buyout or taken, look, I'd imagine that company, with all the money in the PE space, the VC space right now, I'd imagine it gets taken private, but not at the prices, you know, much lower. So I don't think Apple hurts them. I just think it's a fad. So yeah.
Yeah, I think there's more than, I like to think that there's enough out there, you know, for everybody. I think next year is going to be an interesting year, especially from the tech side of things, you know. And it's funny now, while you were talking about Zoom, we've seen this massive push in the tech market because of coronavirus. Things are going to get back to normal, but I think there's going to be a massive resistance from the workforce. And I love having this discussion with you, Dan, because we talk about charts a lot, but it's great to get into the fundamentals of it because you've got such a great opinion on it. You know, I feel that you know, we've been forced to work home. We've embraced technology. I mean, we always have, but on a completely different level. I think there's going to be resistance from the workforce next year when everyone's jabbed their pot, the world's ready to go back to normal. People are going, well, I've been doing my job perfectly fine for the last year.
Yeah.
You know, there's, I wonder how that's going to play out. I mean, are we even going to see, look, it affects everything. It affects real estate. I mean, a lot, are we going to see Manhattan a ghost town? Are we going to see, an exodus from the Bay Area? Some of the most expensive real estate in the world. London. I mean, why live in the city? Is it now that cities are just going to be entertainment centers for the arts, the crafts, and hanging out? Are we going to see these micro cities all around the place? I mean, heck, where I live, I'm about, 35 minutes outside of Philadelphia, right? Way away from Philadelphia. Yet we got these townships kind of growing with their own malls and their own things on there, How's that? I mean, I think this is what makes truly the market so uncertain right now, because there's a lot more at stake. And as well, we are living in a world right now of low interest rates. So everyone's scared to put interest rates up. So it's easy to borrow and keep putting money in the market.
Yeah.
I think there's a lot of, let me put it this way, Dan, I'm throwing a lot at you here, but there's a lot of uncertainty because there's a lot of things to consider right now, right?
Yeah, I think for sure the way of working at an office is definitely, I think this is a new reality. I think so. Oracle's moving to Austin, where Vince is. Tesla's moving to Austin.
Yep.
A lot of Silicon, or even Miami. Miami's, they're discussing it's like new Silicon Valley, right? So I think even I read something the other day. Who's the CEO of Oracle? Is it Larry? Who's the CEO? I always forget the name.
Right, I don't know. You're better. You know better than me.
So he wrote something to the employees and they published it. And they're like, hey, look, all you guys moving to Austin, essentially, I'm going to continue working from Zoom, but basically like flexed on all of us. Like, I'm going to work from my island in Hawaii, basically. So he's not going into the office. I think it's going to change for sure. I know a lot of people that have left New York. I was just in San Francisco 2 weeks ago. People came back from there. So yeah, I think it's going to change the workforce as far as it adjusting. Yeah, I think there's probably issues with the commercial space for sure. I think there's a massive issue, but I think that's been, I mean, look at Sears, look at the malls across America. I think that's been an issue for the past 10 years. The transition is just slowly starting to happen. But I think on the other flip of the coin, and when we're going to talk about long and short today, I think on like retail brands, travel, I think that's going to explode. I think, consumer brands are going to explode end of 2021. Whenever we get back to the normal, I think you're going to have a massive bull rally in these markets. So.
Absolutely. Well, now this leads us in, I think, perfectly to starting to now talk about, the subject of today's show, which is options. And look, there's such a big subject, Dan, that you can't just explain everything about options to everybody in just one go. But I think if anybody was tuning into this live right now, or looking at the recording of it, the hope was, hey, let's talk a little bit about what we love about them. And now you're a big options guy. I've moved more into them, myself over the years as well. I think that with all the uncertainty out there, options offer a much safer and easier way to participate in the market. But the issue is if you don't understand them, then you're going to get crushed by them, right?
Yeah. So options. So look, I've traded options since 2011. So this is what, year 10. So obviously I think the past 2-3 years are like Robinhood, especially Robinhood more than anything, which by the way, for those of you who don't know, just came out and said they were selling their order flow, which is how they made their money, which wasn't a secret.
I know. It seemed like it was a secret to everybody who didn't know, right?
Yeah.
Like,
so
well,
we don't sell our order flow, but the number one buyer of their order flow is Citadel, which is not a secret, right? So
you do realize how these guys make their money? Like Webull, I see another one again, and everyone's getting so excited about it. It kind of frustrates. It's like, guys, you do realize there's nothing free in life. No. They're just giving your trades to the other side, to the people who got a lot more money than you. So yeah, whatever. And look, that's for a topic for another show.
So good and bad options. I mean, look, from a leverage standpoint, they allow you to get into positions in equity. So I'm going to talk about Disney later today. So I think Disney eventually gets to a certain price target, which we'll discuss. But if you don't have 100 grand or 200 grand to buy into that company, you can buy optionality, and the optionality lets you in for $1,000, $2,000, and you can hold that thing for a year, 2 years, and you can ride that wave higher with a very low cost of entry, right? And should you make money, you could exercise the option if you had to. You could sell it away, but I think options give people the ability to put capital to work with less money, and I think especially this year, industries have been affected. So income's got to be affected for sure, right? So I think now more than ever, it's something people should look at. But you got to be real careful though, because again, you have the world of weekly options, which are dangerous. And I know because I was there in 2011, literally the week they released them, I was trading those things. So I saw the evolution of those. You just have to know how to use them to maximum benefit. So,
all right, so let's talk about the good and then the bad and then the ugly. All right.
okay.
So the good thing is this. One of the biggest complaints I've had from people coming to me over the last, and I'm going to say literally especially the last 5 years, is stock market's so expensive. And we talked about this many, many times, Dan. You know, buy and hold investing has huge merits. I will never go online and go, it doesn't work. It works, but the problem is the higher the market goes, your capital, your buying power decreases, right? Because you're paying more. It's like buying, real estate in Manhattan now versus buying real estate in Manhattan 30 years ago. You know, it might be the same condo, but the rents haven't gone up in line with the prices. So what's happening is you take a stock. I mean, look at, I got a chart of Zoom up right now in front of me. Okay. And I'm going to talk a lot about it, but I got literally this chart of Zoom up right now. And let's just go take a look at this weekly chart for a second and where we were. We were less than $100 last year. And now a year later, we're $400. All right. We were as $550. So literally a year ago, you could have gone and bought a share of Zoom for $90. Now, if you want to go and buy a share of Zoom, it's going to cost you $400. You've just lost buying power. People don't seem to get that. Your money doesn't go as far. The way you, and the thing is, yeah, you go and buy one share at 400 or you can go and buy one share at 90 because then the more of the share you've got, if the price goes up, you get a better gain, right? Because you have more of the company. It's like owning, all you own is a part of a company. If you were lucky enough to own, 1% of Apple, you're doing good. But if you own 50% of Apple, you know what, right? I think people don't understand that. So what's happening is the price of this is going up, right? The actual market price, your buying power is going down. What I love, therefore, about the way to overcome that is you buy the options, which give you the right to own it at a set price, but not the obligation, and you can let go of it. Right. So what I think is very cool is you're increasing your potential rate of return, but also premiums are typically lower. So your actual outgoing risk is going down. Now, tell me, how good is that? My rate of return potential is increasing, but my risk exposure is decreasing. I call it stock market participation without stock market capital, Dan. So, what are your thoughts on that? Do you see it the same way? I mean,
so take what you just said, everything about buying power. So this is literally what happens, right? So the reason you have so many education companies in the space where they're like, hey, every day we're going to give you stock watch lists. So you're going to day trade stocks. Or the reason you have to go to offshore brokers, which are real sketchy, to get the leverage in your capitals, because here's the concept. People come to the market, let's say with 10 grand. They go, okay, look, why would I buy Zoom when the cost is just 400? Okay. So they're like, well, that doesn't work. So I go to what? Naturally, you go into the penny stock or mid cap markets. You start buying stocks that are $1 to $5 because the concept's, okay, look,
I can get more of it.
Right. You can get more of it. Right. So that's the concept. But then they miss the back end. You're trading companies that aren't institutionally traded. There's not a lot of volume on them. You're dependent on, it's basically musical chairs, right?
Well, I used to call them coral snakes, because on the old days, and again, if you're new to this, you won't know what I mean, but anyone who's got a bit of experience, the old level 2 systems where you had all the market makers at different colors, and it was like a snake because there's so many bids and offers. And what people don't realize is, guys, they're called penny stocks for a reason, because no one wants them. They're not worth anything.
And everybody goes to that market and trades it, right? So that's like the mindset.
And by the way, then Dan, and just on that, not to interrupt you, but here's the great thing: you get in the penny stock, right? You buy it at maybe 50 cents. The thing goes up to 90 cents. You're like, woo! And good luck trying to sell it. Yeah, they just pumped and dumped you. But yeah, so people are searching for rate of return, right? So then what happens? Then
so they do that, and so it becomes, look, you get down to like, I've done this because I've taught people for 5 years, and I realized the mindset of it. So then you get into another realm of like, okay, look, I need to buy a company. So take like Plug Power, for example, because this is like a huge like cult stock for a while. Like they're going to buy into this company's like story, and you get stuck in that because you're down 20%. And you've got to wait 2 or 3 years. So now you have dead money in a position you didn't want to have dead money. And then you lie to yourself and say, look, it's an investment, right? So that's what happens all the time. So what options do is
or it's not a loss until I close it. So you just, you know what I mean? It's not a realized loss.
That's a running.
It really is, because your money's gone.
In the trading world, that's a joke. It's not a loss until you realize it. So
yeah, right.
So, but anyway, so options give you the ability to exercise, right, less capital into an idea. So Disney's a good example. We had some students in the room in our wealth abilities class who kind of move towards the leap concept, right? So let's talk about leaps for a quick second. So get away from weekly options, take the concept of buying options that expire in 12, 24, 36 months, right? You have all this time to be right or wrong, and you have the optionality to either ride the trend higher or lower, right? So I think that's a really good and viable tool for most people. But again, it's all about navigating like the options markets. Again, it's real easy to get into weekly options, and I'm not going to sit here and tell people I don't trade weekly options. I do, but I like the long-term options too. So
just to explain a little bit about what you were just discussing there, Dan. Real quick, and again, I don't want to go into like too much detail on this because of where we're at. But you just talking about Disney. Let's go over and just pull this up. And again, look, by the way, I'm going to make a claim here. This is for education, entertainment purposes, everything that Dan and I are talking about here right now. So no one's saying go out and get Disney and everything, but what Dan's talking about, and this is the good of options, right? So let's just zoom in on here. Right now, let me do that again. Disney's trading at $173.40 as we speak right now. Great, right? Well, if I want to go buy 100 shares of Disney, I got to drop $17,340 to participate in that move, right? So first I need the capital. Disney was $17 a share. It'd be a whole lot cheaper. I need to outlay, right? That's a cash position. On the same thing with a cash account, I could participate in Disney, and I could, let's go for the current, right, at the monies are around the 175s on here, but let's even at the monies are right in the monies right here, the 172.50s, I could participate in Disney and pay $4.45 for one share, for the right to own one share at
145.
$4.45. Heck, I could say, hey, I could actually even buy it $3.25 and buy the right to own it at $3.25. Times I buy 100. There's one option. It's for 100 shares. That's $325 of cash I can put down to participate in the move. But let's go in the money. And let's say we're going to buy the 172.50s. I like the strikes on here. You got the 50. These strikes are great. The 250 strikes on here. I could buy those options right now. Give me the right to own Disney at $172.50, and I could put down $4.45 per share. Times that by 100, $445 to participate in Disney, rather than $17,500 to participate in Disney.
Right.
Sounds too good to be true, doesn't it? Well, that's because it is, right? So that's the concept, and that can work very, very well for us, right? And also on the downside, you may say, hey, I think Disney's going to go lower. I'm not bearish on Disney, but let's just say I believe that Disney was going to fall off the edge of a cliff in the next couple of weeks. Then I can buy options on this side, and I can say, hey, I think it's going to go down. And I could buy the right to be a seller on that and say, hey, to buy the right to buy insurance, if you like, and pay $225 right now for a contract to have the right to be on the downside of Disney for $225. So it works both ways. But let's make it simple. Let's talk about that. Let's say right now, I'm still bullish on Disney. I love all the stuff that's happening on Disney Plus, all the stuff they're talking about, Dan. I can literally go buy myself a contract right now and have the right to own 100 shares of Disney, $170.50 for just $445. That sounds awesome. So that's the good. Let's talk about the bad. Where's the bad in all this, my friend?
Oh, you want me to talk about the bad?
Oh, yeah. The bad as well, right?
The bad part is this. There's two angles I'll take with this. Number one is the world of options. And let me just, anybody that's watching or you watch this later, don't ever confuse a concept when anybody in this industry or any books tell you that it's an advanced strategy because you're doing collars or spreads or diagonals or butterflies, right? The concept of advance is subjective. Number two, just because it's quote unquote advanced doesn't mean it's more profitable or easier. So the bad side is, one of them anyway, is navigating what option strategy to run. The other bad part is if you get into options directionally and you don't understand market timing, or you're always like after weekly options, you can lose a lot of money. So I've legitimately seen students do 6 figures in a matter of months and literally lose it all. Okay. I mean, I've had a few stories. I mean, this is good and bad, like, because they just get addicted to short-term, high frequency, like gains, like 300-400%. So that's the bad part. You have to diversify your portfolio. So I'm just going to give you an arbitrary number. So let's say you're trading with $10,000. I consider personally 60% of that to be like leap options or options that are like dated, and maybe 40% short-term. And by short-term, I mean 30 days or less. So one is like income, like I'm actively trading the options in, out, and one is like a swing trade. Like I'm going to buy a leap option on Disney and I don't look at it for 6 months, and I can be right, I can be wrong. So I guess that's the bad part, is it's too easy to get sucked into weekly options. And the problem is you have a lot of these bozos on TikTok and YouTube trying to teach people how to trade options, and they literally have no clue. They just regurgitate information. They've heard from somebody else, and it's just like bad information regurgitated over and over, and it somehow becomes true. So you have to be really, really careful of what information you take in. You really have to dive into it. So that's the bad part, is that we're in an age of internet information, but a lot of it's pretty bad. So you got to be careful.
Hasn't it always been the way as well? I mean, I think that's one of the things I discuss about it. The problem with this business is trading and investing is a wonderful thing, but it takes hard work, it takes commitment, it takes education, and it's so accessible. It's so easy to just get in, right? Without any prior knowledge. Like, no one makes it difficult for you. In fact, they make it easier and easier and easier. And then, people are obviously going to say, they go, well, of course you're going to say that because you educate people. It's like, well, on the flip side of it, the more uneducated people out there, the benefit it is to the educated people, actually, because, there is the zero sum game element of it. But all right, you can lose, there's leverage, and you can get a death by 1,000 cuts, right? So we've looked at the good side of options. You can do very well. Increase your rate of return. It becomes simpler, a lot easier to, enter positions. You can be a lot more hands-off. We love all of that. And stockability, big on that. The bad side is people get addicted to the high frequency side of it. They also are looking for the quick, easy gains. They don't have a trade plan, no risk management, and there's leverage that they abuse. That's easy. What's the ugly side? Well, let me kick this off. What's the ugly side is, man, they can be really, really, really complicated if and there are so many different strategies. I can talk about straddles and strangles and iron condors, and diagonal spreads and vertical spreads and bear call spreads. And I find there's a lot of people who love to flex their options intelligence on the world. And it's all just theoretical BS.
Yeah.
With no practice, because like literally anybody out there could go away and study options in depth for 6 months and write a nice paper or ebook about it and sell it, have a nice YouTube channel about it, but never ever do anything with it, right? And never trade them. All the people I meet, Dan, who really trade options don't do any of that super complicated stuff very often. They have them like a Swiss Army knife, but they do that. So what's your experience with the ugly of options, Dan? Similar to mine, or is that anything you'd like to add?
Pretty much the same. It's a problem with this industry, and it's not even in like day trading, but even like high finance, whatever we consider that to be.
Yeah.
People always want to sound smart, right? There's this concept of like sophistication. So people can sound really, really smart for dinner conversation. That dinner conversation doesn't pay mortgages, right? It doesn't take you on trips. So that's the ugly side, like you're saying, is there's so many different strategies. And the problem is, and let me just get back to it for a second. There's no best strategy. Let me just say that. So I'm not even going to sit here and tell you directionals is the best, because it all depends on your account size, what your goals are, your risk tolerance. So whatever that is dictates what best is. Okay. So, and people will tell you like, oh, call spreads are the best way. Well, according to who, right? They might be good if you're on a fixed income and you don't want risk. Yeah, that might be the best strategy for you. If you're like us, right, we can take aggressive risk. So maybe directional works for us, right? So it's all dependent on who you are. But that is the ugly side. It's kind of a tough road to figure out what is it that I want to do and what option strategy fits that. So
that's the ugly. I mean, I'm definitely more of a simple approach guy. I mean, I've been a futures trader for most of my career, and I still actively trade them, and I've adapted it. But I'm a one-trick pony in many ways. So I'm
yeah, but you switch a little bit too. So I don't know if anybody knows this, but Sam trades a lot of NASDAQ and Russell. So as he's now the CEO of Stockability, so he gets busier. So what he's been doing, because he can't actively trade futures, he'll look at a Russell setup or a NASDAQ setup and say, okay, look, if a Russell's a short, I just buy IWM put, whatever expiration, or if NASDAQ's a long, I'm just buying calls. He doesn't have to sit there and babysit that futures contract. So there's different uses if you get creative on how to do it.
You're right. I mean, my strategy is exactly the same for timing the market. When I buy, when I sell, something that we've been teaching all of our students. I implement your stuff from all of our programs. I was just like, I need an easier way to participate. Now, I will say this with the options plays that I'm doing, potentially are my returns a little smaller compared to what they could be when I was doing futures contracts. Yeah. Are they better than the outright stock? Way better. So they're somewhere in the middle. But for my attitudes, I don't have time to sit there, and I actually don't want to sit there all day anymore trading the way I used to trade. I want to pick, look, I'm this. I pick it up. A market opens. I'm like, up there, I want to sell it. Down there, I want to buy it. This is my trading idea. Put it on. Instead of just keep getting in, getting out, getting it, I just do my options play, and either it works or it doesn't. And it's a lot easier for me. And I like that, you know, especially with technology and everything. That's good. But it doesn't mean my strategy is the same. But if I then want to say, you know what, I'm going to give options a break and I'm going to really ramp up things on futures, my timing strategy is the same. I'm just using a different vehicle to do it. So great example. You know, my wife's got, you know, a nice, you know, sedan, you know, that's great in all weather, but out in the snow right now, it ain't so great. Well, guess what? We get my truck out, got my 4-wheel drive. It's all good. The way I drive is the same, whether I'm driving the sedan or the truck. I just do it to the market conditions or the road conditions. That's a great point. You know, but, and here's the thing, there are many ways to skin the cat. So we were talking about the bullish moves on gold right now. I'd love to show everybody this. Literally just going, you'll check this out, Dan. This is our live coaching community that you're very active in. You know, you're in here constantly. I mean, look, I click through this thing. All I see is Dan down here. If I go over to the financial markets bit, I'll see in here. There you are, Dan, you know, posting on here, showing trades, sharing ideas. You know, this is a really awesome, you know, like piece in here. All the students like posting trades and stuff. There's good old Ranger Doug. We were talking about this earlier on. 2 gold trades here. Look, this is Ranger Doug today. Nice little move on here. He's got what, a $690 plus futures move. This is a great example. This is him today trading long on futures. You know, a quick $600-700 move that he's got on his account that he was sharing with everybody. Real nice on there. He was buying the futures. Now, on the flip side of it, though, take a look at this. This was today, right? That was at 8:39 this morning, Eastern time. At the same time, our other coach, one of our other lead coaches on here, Ryan Watkins, who everyone knows from the show, was, hey, I'm out of my GLD option swing trade I bought in the daily chart support zone, exited on a gap up. So he was in a trade for about 4 days, but he was using options on GLD. So Doug was trading the gold futures and Ryan was trading the GLD trade. Okay. Just a different thing. He posted a nice little screenshot of that. Had a nice little move on there, Dan. We can see on there. Beautiful little P&L on there. Just nearly $16,000 on a couple of day move on the options. The premium on those things just exploded off of the area where he bought it. You know, now ask yourself a question. People looking at that right now, look at the side, look at the P&L. We know he did. He's buying calls, right? He was buying the calls cheap, explosion. That's what you were talking about. Massive rate of return. You're not going to get that by trading the futures. You're not going to get that by trading. The options can give you that. And, you know, a lot of people might say, hey, 15, 16 grand in a couple of days. I'll take that all day long, right? And then it could be done for the week. It could be done for the month. You know, it's all different styles of trading. And I think it's so important to make it your own. Don't you, Dan, when you see this? So you literally got an instructor and a student both being profitable on the same market, but doing it through futures and options, right?
Yeah, it just depends too, right? I mean, you could even, I mean, there were times that when I was running the portfolio at the fund that, I mean, we had a futures book and an equity options book. So it just depends. I mean, if GLD, look, futures for a lot of people move kind of fast. So you replace it. So obviously the GLD trade is the same concept. And he probably could have traded the futures contract with it as well, but just replaced it with the GLD calls instead, which obviously turned out to be a really good trade. So
yeah, Rob's just saying right now, might consider an option strategy on the IWM. It does make it easier. It doesn't mean I'm going to stop being a futures trader. I can tell you that right now, but it's all good. So look, we covered the good. You get a lot more bang for your buck. They make life a lot simpler. We can agree on that. The bad is there's a lot of leverage and people overcomplicate. And the ugly is there's so many different things you can do. We have to hone in and do one thing specifically on it and just get good at doing 1 or 2 things and add it on there as well. But I think we can agree, Dan, options are a great thing. Just on that subject as well, we are doing, before we go and do some market analysis, if you are actually looking at the show right now and are keen to find out a little bit more, then let me go ahead and show you this. Dan, you're going to be doing, I believe, let me just take a look, my friend. You and myself and Ryan are going to be doing a webinar on, let's say, Tuesday, 29th of December. So we've got just a couple of weeks to go, 12 days, in fact, we've got until till that goes. Let me go and pull up the screen and show everybody the thing on there. Here it is, right there. There you go. This is our webinar that we're got coming up on here on the 29th. This is on the Stockability website. So if you go over to stockability.com and scroll down to the bottom, hey, there you are, Dan. There's me, there's Ryan, all on here. If you scroll right down to the bottom of stockability.com on here, you will see here complimentary webinar, complete options for a complete portfolio in 2021. We're going to be talking about both small accounts, larger accounts, income strategies, wealth strategies. We're running that at 5 p.m. Eastern, going to be a couple of hours. It's complimentary, show you what we do at Stockability. Can you give us a little sneak peek, Dan, about some of the things you're going to be talking about in that?
Yeah, so I'm going to talk about trading a small account. So basically, one of the things that if you're new to options, and I kind of talk about in our options abilities classes, the easiest thing to do for people to do is like, hey, I want to throw like $50,000 in and start like swinging for the fence. So I'm going to talk about how to get your rhythm and trading with a small account to slowly understand that market, but also while you're making money. So I'm going to talk about that. I'm going to go over some recent trades that I've made that I've been working on. I took $1,000 into a brokerage account and I've been trying to slowly build it up. So I think it's at 2,000. I was at $2,600 yesterday, but pulled back a little bit. So I'm going to literally show you guys. Sometimes options are volatile, but I'm going to show you like how it really works. And I'm hopefully by the time it's done, I should have it at 3,000 to 4,000 from the small account.
That's pretty cool. Again, just so people go, because they think you got to have a lot of money, right, to even get into this stuff. And that's not always the case. You know, that's the thing about it. You know, it doesn't always have to be that case. So yeah, that's on there as well. So Dan, I'm excited. And Ryan's going to be talking about a wealth application of it. You know, again, you mentioned the deep in the money, the leaps, such a versatile tool. So guys, any of you are interested in that, it's a complimentary webinar. It'll be an hour and a half, 2 hours and stuff. Go on to stockability.com for more information about that. There you are on the website. Go down to the front of the homepage, click on the register today. We'll get you taken care of as that as well. I'd love to see you there talking a little bit more about that. And I'll leave that up at the end of this show again on the website, just so you've got all the details of that and how you can move forward with that if you want to. So, all right, well, that's all good and said. Very much looking forward to that. I got one question for you before we do your call, my put, okay? Because you changed my mind today, by the way, Dan. You actually changed my mind. I was all kind of, you know, I had everything planned out. And then you said something, I'm like, you know what, I'm going to look at a different market. We'll get to that in a second, but we're going to go quickly off topic. I'm so tired of hearing about Bitcoin, Dan. I ain't got a lot to say about it. Dan, what do you think about Bitcoin hitting 20,000? Are you rushing out to buy it? I know you had a great opportunity on it maybe a couple of years ago. What's your thoughts on Bitcoin? I think we need to do a bigger, and let's do a bigger show on this in the new year, but a quick preview. Daniel Bustamanti on Bitcoin.
My thoughts that I'm tired of hearing about it. I mean, everybody keeps look. So I remember 2017. Everybody at the cigar shop I go to, everybody was a Bitcoin expert. Everybody was a mining expert. Then it crashed, and everybody became a TikTok expert. And then that's done. So now we're getting the rise again. So I'm just tired of hearing about it. I don't know. I mean, does it go to 50,000, 100? Sure, maybe. Yeah.
Feels like we're at the casino a little bit with it, right? You've just given me the idea, guys. Ladies and gentlemen, this is a live show and Dan's on the show right now. Everything's live. You've just given me, we do your call, my put, but coming in January of next year, a brand new feature will be on this show when our friend Daniel Bustamanti, and it's going to be called Buster Bitcoin. We are going to do a Buster Bitcoin feature where Dan is now going to be our resident opinion on Bitcoin. Okay. And it will be serious. I think there's opportunities, but we are going to have a little once a month Buster Bitcoin breakdown of what it is and whether we think it's been good. I know you're sitting there. You've had a good opportunity on it. It's all good. Me, I'm still not convinced. I hear this, Dan. Well, all the institutions are coming into it. Are they? Because if I know institutions, and heck, you've been in the institutions long enough, they don't broadcast everything they do. They don't tell everybody what they're doing. Because if they told everybody what they were doing, everybody would do it, and then they wouldn't make all their opportunities work, right?
Yeah, look, it's just hearsay.
What's the word on the street, Dan? I know you've got connections on the inside, my friend.
No, I wish I did. But so 2017.
And even if you did, you wouldn't be telling us now. So it's all good.
Yeah. So 2017, you know, when Jamie Dimon came out and talked about it, they were like, hey, he's all against it. But I remember understanding that JP Morgan had a miner's desk in London, in fact, on it. And I was like, yeah, he's lying about it. So that's when I bought a ton of it. Basically on that, I was like, he's lying. So I'm sure they're involved in it. For sure there's HFT in it. It's too big of a market dollar-wise for them to not be involved. So whether it's HFT trading or they're actually taking positions.
You're talking about high frequency stuff you're talking about, yeah?
Yeah, I mean, look, you know, it's funny. So when it first came out, and we'll say this, I went back and started looking at it. When it first came out, from technical levels, it didn't react that well. In 16, 17, based off fibs and price levels, you started to see a lot of order flow come in. So I think what happened is they automated it and a lot of HFT got in. So the same HFT that runs in equities markets and bond markets got into that market as well. So, I mean, look, I don't know. I think everybody who found cryptocurrency, it's good because it gave birth to new traders in this world. But you get those same type of moves in equity options. You get them in crude oil options.
Well, this is the thing. This is the thing. This is back to what we talk. Here's Bitcoin right now, real time, $23,436.54 for something that really most people in the world don't know anything
Looks
about.
like a short right there, huh?
Doesn't it? And you look at it and you're like, yeah. And look, I actually say when Bitcoin futures came out on the Chicago Mercantile Exchange on the last one, I actually got short on some futures and actually did okay out of it because I missed the upside.
Yeah.
I've just been too busy with other things. I've been waiting for technical levels. I am seeing technical levels. I'm happy to talk more about Bitcoin. It ain't going away. I don't hate it. But again, the money was made by the people who were the seriously early adopters. Yeah. This is like going, like, here's the question. How much money, Dan, is someone, let's imagine this was Amazon right now. If this was Amazon right now and you were looking at it and going, well, I can go and buy one share for 23 grand. Well, good luck. Most people, in America, the average American doesn't have $1,000 in savings. They believe that 90% of the United States population doesn't have $1,000 spare cash in their savings account right now. You couldn't even buy one whole Bitcoin. You can buy a fraction of a Bitcoin. It's not what you can't even buy one share of Amazon. So it's the same thing that we talked about, right?
Yeah. The real trick with the cryptocurrencies though is buying derivatives
of them.
That's what you do. So you can buy and I figured this out right away. So you could have bought, if you look at Ethereum, I don't know if you have it, but if you buy these derivative currencies, they all rise with it. So that's how you can play it too.
Yeah. Well, I think it's something we can definitely will be doing more in Stockability, talking about it. But guys, welcome to the very first Bust of Bitcoin. That's what it was. We're going to be doing it. Good luck to you if you've been making some money on that. I mean, fantastic. But man, too fast. Too fast. We'll see. But again, nothing lasts forever. I've never seen a market go up in a straight line and continue to do that without getting a little bit of a pullback in it as well. Dan, what are you we're doing your call, my put, and that's our last feature of today's show. What do you got in store? You're bullish, you're bearish. What do you want us to pull up on the charts?
So I'm bullish Disney.
You're bullish Disney. And you know what, man? I am a Disney nerd. I love Disney.
That's right. You guys just went recently. Right?
I went. I've been since the COVID thing. I did it. I supported Disney. They needed it. They haven't made a lot of money this year, apparently. We went. It was a quarantined version of Disney. But I went in the Millennium Falcon. I did the new Rise of the Resistance ride. It was amazing. It was good. It was cool. I love it. I know they're still shut out in California. Disney World Florida is open and stuff. Big fan of Disney Plus. Having a 3-year-old, it's been a lifesaver in many things, but a great show. And I think a lot of this drive that we've seen on Disney, Dan, we see this massive gap up after the Disney Investor, the investors conference. I think it was last week. A whole slew of new products that they're doing on a whole load of spin-off shows. Oh my God, yeah. They're actually bringing back Hayden Christensen to play Darth Vader against Ewan McGregor's Obi-Wan Kenobi and Obi-Wan Kenobi show. I think I'm a big Ewan McGregor fan. Awesome as Obi-Wan Kenobi. Not that Marvel, lots of other IPs coming out on it. Yeah. What you thinking, Dan? I wouldn't want to buy it now. I agree. You're bullish on it? What are you thinking? When, how, next year?
I want it back at like 150, 160, right? So once we get a pullback, I'm bullish to this thing. I mean, this is going to be hard for me to say because I'm always bearish on everything. I think this thing goes to like $250, $300 a share. So I think by end of 2021, you see this thing double up. So I'll tell you why. So number one, the streaming content, like you said, they've done a really good job there. They've got an activist hedge fund gentleman in there who's really switching things up. They've messed some things with the dividend. But really, look at the stock this year. So it's really been driven by the media side. Now, obviously, once we get back to normal, whatever normal is, and we get these parks back open to full capacity, right, you're just going to have a revenue stream back online. And I think the stock rockets. So if we get back to 150, 160, or 150, 140 is that area there,
yeah,
I'm probably going to be in this thing with leap options. Again, that could all change. But right now, it's in my pipeline as an idea for a long swing trade for at least the first 2 quarters in 2021.
So you're thinking longer term play on this. I got to say, just looking at this chart, and I'm on a weekly position here as well. After the COVID sell-off that we had earlier this year, you know, what I really like about Disney's price action is it's been a nice, slow, steady trend build. You know, plenty of investors have got in. Then that push when Joe Public's, and that means that's Joe Public. That is a lot of that final push that we've just seen on there. A lot of Joe Public in it. But I think with a pullback, we've established a new 140, 150 benchmark right across here. I like it. I agree with you. I think it's a great, to me, it's a nice play. And again, you know, looking at those longer term leaps on that, getting those things in the money, that could be real nice. I can't disagree with you. I just want to pull back on it. Like I say, and when I talk about that, ladies and gents, anyone who's watching the show, what Dan and I are saying is we don't want to be buying it now. We want to wait for it to come down and get it a little bit cheaper before we get the next leg up, you know. And that for me would, when that thing goes on sale, if and when it does, that one's on the watch list for sure. I couldn't agree with you more on that one. All right, what me? Well, you know, I was going into this with NVIDIA today. I was going into this with NVIDIA, just scanning through and looking at weak performers, and I'm still bearish on NVIDIA. I am, you know, and I'll pull it up right now for everybody, you know. And again, longer term play, I'm not seeing the strength, the recovery on it. I'm seeing a lot of sideways indecision on this market right now. I'm still a little bit more bearish on it. I got to say, I just can't, you know, from a price perspective on here, this is what I just see. And the reason why a lot of that is what's giving me the spooks is these monthly price action I'm seeing here. We've had that initial push and then now, if we were in, I will say this to everybody looking right now, that would not concern me quite as much if the overall stock market wasn't where it was. This could be a nice pause and break higher. But the fact that the whole market, the indecision, to me, a pause like that with the overall state of the what we call the three kings, that the S&P, the Dow, I don't like it. I'm bearish on it. I see a ton of wide open space. Man, I got to say 350 all day long. I see 350 on this thing next year. I do. So that's on that as well. Purely coming from a price perspective. That was going to be my call. But then then you mentioned Zoom. And then you started, and I looked at the Zoom chart while you were talking, and I'm like, oof. That's that. Now, this one to me is bearish, and this to me is more bearish. And I'll be like, how can you write off Zoom? I'm not writing off Zoom. I'm not writing off Zoom. What I'm saying to you is a company like Zoom is being propped up by the big boys. It's been helped up by a very strong tech sector. I mean, if you actually go take a look at the XLT right now, the tech sector. What's it? What's the code on that, Dan? On the tech sector.
That is not XLE.
It's not. What is it? It's not XLT. It's what is it? X
ETF. I don't know off the top of my head. I've never traded it. I'll tell you, it is XLK.
That's it. XLK. Easy Energy, V's, F's the financials. Here we go. This is where we're at right now. Okay, so I just lost connection on here. You still getting me on here? Yeah, Dan?
Yeah.
So, good. So XLK, you know, you see this again, you know, the whole sector, I think, you know, is struggling to break through these new highs, heavily overbought in this. To me, you know, that is a market that has got, you know, weakness on it. And I would say going back to Zoom specifically, which is what I was looking at on here before, I just look at that. I mean, that retracement, that rejection we had at 500 and 550, and now the series of lower lows and lower highs. Again, looking at this weekly chart right now that I'm seeing, that for me is the tell. You know, the series of lower highs, lower lows. There's new controlling bears coming in on here. This area's taken off. I got to say, $200 a share. I'd be interested at 200.
Market's pulling back end of year or with the new transition. I think you're going to see a pullback, but I think that pullback's going to get bought up.
Yeah. Oh, I'm not writing it off, but short term now, that thing I see going down to 200. And I think at 200, it could establish itself a real nice. Even if I was to take a look at around the 250 mark here, but for me, 200, 250, this whole area here, that's a longer term play. But there's a lot of unfilled imbalances on that market going lower. To me, it's showing weakness. I think, you know, more video conferencing competition is coming out there as well, you know. And I love Zoom, though. Look, we're on it right now. Zoom, I love you. If you're listening right now, we're using you right now. But again, too fast. People jumping on the bandwagon, and I've seen this in my 17, 18 years in the market. People just jump into the market. They just throw their money at things without really thinking about why they're doing it. Your call is Disney. My put today is going to be Zoom. Okay, that's my one on there as well. So, Dan, it's been a real fun show, I got to say, today. We've covered a lot of ground. We said we'd put it on for a bit. We're at the top of the hour and stuff. What are your plans for the rest of the week, and what you up to over Christmas?
Just try to hopefully relax, but we know that's not happening. So I mean, I'm going to tell myself just relax. Probably try to play some golf this week, and I haven't had a chance to play in a couple of months. So
Yeah, you can see I can't really be doing that out here. I'd love to, but
you guys can snow and ski and
I'll play some virtual golf on my Oculus Rift. I'll do that.
yeah.
I might have to do that. One question I was going to ask you as well. You typically stay active over the Christmas time, New Year time with the markets, or do you tend to take a little break? I've always been one to take that Christmas week off. What's your thoughts?
Normally I stop trading honestly, like every December I stop trading, but I didn't have a great November, so I keep trading right now. So yeah, I'll probably stay. Maybe I'll do it next week. I really wanted to trade this week because of Tesla tomorrow. I might be done next week. I really want to short this market, so I'm going to hang out and see. So,
all right, cool. Well, I know you'll be active in the Stockability community, and they're loving what you're doing there as well. So awesome, awesome, awesome. And a Christmas party for the company as well next week. I guess I will see you there as well. Yeah. Ladies and gentlemen, that's Dan. Dan, thank you so much. Have a great week. We'll look forward to having you back on the show. And then next month again, it will be Buster Bitcoin. We love that. Great. We have a brand new feature, Buster Bitcoin. I don't know, man. Dan's going to be like getting on the phone to me after this saying, what the heck are you doing to me, man? You are killing me. It's been a fun show. A lot of things we've been talking about today. I want to thank again, Dan, for taking the time to talk about the good, the bad, and the ugly of options. We covered a lot of things, man. We talked about Bitcoin. We talked about the economy. We looked at some charts. As we're coming to the end of this year as well, I want to say a sincere thank you to everybody who's been supporting and watching the show. You know, like anything, getting traction, building it up and everything, it takes time. All you guys, you loyal viewers, listeners who've been checking out these, thank you, man. We wouldn't be here without you. We really appreciate you. We hope you appreciate us too as well. On that subject as well, this time next week, it's Christmas Eve. Jingle bells, jingle bells. I will be doing the show, just a quick little Q&A show, okay? Just me on my own, giving you about 30 minutes, 40 minutes or so, getting a little Q&A, a lot of questions coming in. If you've got questions that you'd like the Take Stock Live team to answer, myself, Dan, Ryan, Brian, any of the guests I've had on the show, drop us a line, support@stockability.com. I will leave that information up for you at the end of this broadcast as well, or message us through Facebook, through our Facebook page or our YouTube channel. This show is available for you to look at as a recording on Facebook Live. It's also going to be on our YouTube Stockability channel as well. And next year, new broadcast. We are going to have Stockability Open House, okay? Take Stock Live Open House. Lots more to come. I'll be talking about that in the show next week as well. And also don't forget what Dan and I were just talking about too. If you are interested in hearing more from Dan and Ryan and the team about options, what to do for 2021, if you want to make it your year to embrace something different in the options market from either income or wealth, we've got a great thing for you to be looking at. Again, I brought it up right now here. Complimentary webinar, complete options for a complete portfolio in 2021. Go to stockability.com, guys, stockability.com. Scroll down to the bottom of the homepage, click the register button here. You'll get your link for that, and we hope to see you there. And that is going to be on Tuesday, December 29th, 5 p.m. Eastern. So after Christmas, when you've got that great bit of time, but you're probably wondering, hey, man, I'm ready to do the next thing, okay, as I move into this new year, which hopefully is going to be a whole lot more of a positive one after what we've been through this year. Guys, my name's Sam Evans. This has been Take Stock Live, powered by and brought to you by stockability.com. Have a great rest of your week. It's been great having you on here. Thank you for watching as well. I'll see you next week for our Christmas edition show. Take care.